Meet Pete. He's an ambitious guy who just finished a grueling 8-hour shift at his corporate job. Instead of going home to rest, he opens a delivery app, convinced this is his path to financial freedom. His logic is seductive. If he drives 15 hours a week at $20 an hour, he wins big. He does the mental math. $300 extra a week equals $1,200 a month to crush debt. Fast forward 6 months, Pete looks at his bank app and sees $7,000 in total deposits. He feels incredibly productive, like he is finally grinding harder than his peers and hacking the financial system. But Pete is living in a fantasy world because he is confusing gross revenue with actual net profit. He hasn't actually calculated the invisible price tag attached to every single mile he drove for those dollars. Last week, a mechanic handed Pete a bill, and the reality of his side hustle finally hit him. Let's break down the real numbers that the gig economy apps and hustle gurus conveniently forget to mention. Pete drove 5,000 miles. The IRS estimates the real cost of driving is 67 cents per mile. That 67 cents covers gas, tires, insurance, and the invisible killer of wealth, vehicle depreciation. When you subtract those vehicle costs from his earnings, his $7,000 shrinks to roughly $3,500. He worked hundreds of hours for that money, meaning his actual hourly wage was well below the legal minimum. He was essentially taking equity out of his car and putting it in his pocket, thinking it was income. But the math gets darker. Pete forgot to account for the dead time between his active rides. He didn't track the hours spent sitting in parking lots, waiting for orders, or driving back from remote drop-offs. He ignored the time spent scrubbing fast food smells out of his upholstery and arguing with customer support. When you factor in the dead time, his true hourly wage drops into the single digits, creating a deficit. This is the side hustle squeeze, working twice as hard to earn half as much as you think you are. We have to talk about the taxes. Gig workers pay the employer and employee portion of payroll taxes. That's an extra 15% hit that a normal W-2 salary employee never sees coming out of their check. So now Pete is making less than $10 an hour while taking on all the risk of the road. He is accelerating the death of his vehicle, forcing him to buy a new car years sooner than expected. Every mile driven for a delivery app is a loan taken out against the future value of your car. This applies to freelancers too. If you charge $50 an hour, you are likely only earning $25. Freelancers often forget to bill for the hours spent on proposals, invoices, marketing, and endless client revisions. A $50 headline rate is a mirage if you spend half your week doing unpaid administrative work. If you leave a job with benefits for a freelance gig, you often take a pay cut disguised as a raise. But financial costs are just the tip of the iceberg. The real damage happens in the areas you cannot track. The biggest expense Pete incurred wasn't gas or tires, it was the massive opportunity cost of his time. Opportunity cost is simply the value of the thing you didn't do because you were busy driving. Pete spent 15 hours a week earning peanuts when he could have invested that time in his primary career. What if he spent those 15 hours learning a high-value skill like data analysis, coding, or public speaking? Studies show that targeted skill development can increase your primary salary by 10 to 20% over 5 years. A 10% raise on a $60,000 salary is worth infinitely more than grinding for Uber tips. That raise is permanent and compounding, whereas gig work is linear and resets to zero every single day. The question isn't, did I make money? The question is, was this the best possible use of my time? For the vast majority of people, trading 15 hours for low-wage labor is a terrible long-term investment. You are tripping over pennies to chase dollars, sacrificing your future earning potential for immediate low-quality cash. There is a biological tax to the hustle. Pete is trading his health for money. a trade he will lose. Chronic sleep deprivation is linked to a weakened immune system, lower cognitive function, and higher risk of disease. Pete caught the flu twice this winter because his body was run down from working 70-hour weeks. He missed days at his main job, damaging his reputation and costing him a shot at a promotion. The economy loses billions annually to sleep deprivation, but for Pete, it just means he's burning out faster. He has no energy to exercise, so his physical health declines, leading to more lethargy and lower productivity. He canceled date nights 3 weeks in a row because surge pricing was high, damaging his relationship. These are real costs. The cost of a damaged relationship or a broken body dwarfs the delivery fees. You cannot hustle your way out of a biology deficit. The debt will eventually come due with interest. Pete is exhausted, and because he's exhausted, he lacks the mental clarity to see the trap he is in. This brings us to the most dangerous hidden cost: cognitive load and the depletion of your decision-making battery. Humans have a finite amount of decision fuel every day. Once it's gone, your brain goes into survival mode. Driving involves hundreds of micro-decisions: traffic routes, accepting orders, dealing with apps, and avoiding accidents. By the time Pete gets home, his brain is fried. He has no capacity left for strategic thinking. He cannot plan his career, research investments, or solve complex problems because he wasted his brain power on low-value tasks. This keeps him poor. He's too busy working in his life to ever work on his life. The people who need to be strategic are often too tired to do it because of the hustle squeeze. It's a vicious cycle. You need money, so you hustle, which drains your energy, preventing you from finding better opportunities. The side hustle that was supposed to be a bridge to freedom becomes a treadmill you can't get off. You feel productive because you're moving fast, but you aren't actually going anywhere. You're just sweating. So, is the answer to do nothing? No. The answer is to understand the difference between leverage and labor. Low-leverage work, like driving, ties your income strictly to your time. If you stop working, you stop earning. High-leverage work builds assets. This includes creating content, building software, or learning skills that scale. High-leverage activities require the one thing the side hustle steals from you: time, energy, and mental focus. You cannot build a scalable business if you are mentally depleted from delivering burritos for $10 an hour. Here is the exit strategy: audit your time. Calculate your true hourly rate after every single expense. If your side hustle pays less than your main job, stop. Invest that time in sleep or skills. Apply the replacement test. Would spending these hours on networking or learning yield a higher return in 5 years? Stop measuring success by how busy you are. Start measuring it by what you are actually building for the future. Don't be like Pete, spinning his wheels. Protect your energy, build high-leverage assets, and escape the squeeze. If this changed the way you think about money, work, or security, that's the point. Most financial stress isn't about effort, it's about structure. Once you see the system clearly, you can start making decisions that actually protect your time, energy, and future. If you found this useful, take a moment to like the video, subscribe if you want more videos like this, and turn on notifications so you don't miss the next one. Thanks for watching.